The market pulls back into the close. Are the bulls dead, or is this a bear trap? This is Invest with Jacob. Okay guys, so in yesterday's video, we talked about the fact that 5990 to 6000 level was heavy resistance, and under normal conditions, we should start to see a pullback off of that level, and that's exactly what we saw as the market chopped most of the day before dipping at the close. Now the question is, are the bulls dead, or are they setting up a bear trap? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the charts, we will take a look at the performance of the indicator, and another good day and a really good find. If you want to check this out, it's really important. If you're new here, we did create a trading view indicator for day trading and swing trading. It's killing the market. I'm going to show you examples of it right now. So let's jump into the chart and take a look. Okay, guys, so here we are on the 5-minute SPY chart. This is what we use in my room to day trade. You can also use this on individual stocks, which I'll show you in just 1 minute. But for right now, we're going to go over what we do in our day trading set, and then we'll go over some swing trading. So what you see on the screen here, to the left in the yellow, that is pre-market. To the right in blue, that is post-market. We do need this turned on, but we do not trade in pre or post-market. We only trade the white area, which is regular trading hours. And more importantly, we only trade up until 10 a.m. Pacific Standard Time, because after that, the market tends to get choppy. Even though there were some good trades after today, that's not always the case. And in fact, more often than not, it's a slow market after about 10 o'clock. So we try to trade everything we can before 10, and then we're done for the day. Now, this is a trading view indicator. You do need a trading view account, and inside of that account, you need to get real-time data. That does not come with a standard account. You need to get an extra add-on. It's about $7 a month for real-time data for the NASDAQ and the ES futures. And the reason for that is inside of Pivot Point Pro, when we're trading off of the SPY, if you go into our settings, what the indicator is doing is, one, it's trading price action, which I'm going to show you in just 1 second. And two, okay, it is looking at the ES and the NQ for confluence of all the markets moving in the same direction at the same time. So you have a higher success rate, which is why the indicator is so powerful, because one, it trades off of forward-looking price action, not backwards-looking moving averages and things that are late to the party. And two, it uses a confluence of the markets to make sure that we are in a momentum move that should result in, more often than not, a winning trade. So make sure you have that real-time data enabled. Now, once you have all that, we just simply trade the symbols. If it says sell, we sell. If it says buy, we buy. It's super simple. Right off the rip today, we got a sell signal 3 candles into the day that ripped it straight down. An absolute great trade to start the day, killed it. Got a buy signal, came up just a few pennies short of our first profit take, which is super annoying, but we stopped out on that one. Came right back with another buy signal that ripped it way up here. So another big winning trade. So a small loser here, big winner off the downside, big winner to the upside. Then you got this sell here that moved down really nicely, another winner here, and then no more trades for the rest of the day. So we had 4 trades, 3 nice winners and 1 small loser, because we always have a good stop on our trades, and a really nice day for the day trading of the indicator. Guys, this happens over and over again. Every day we get these great signals. It's really nice and easy. It's helping traders make money. You can see on the screen how happy people are with the indicator. And the really cool feature about it is the swing trading. We're going to look at something right now that I think would be super beneficial, since it's one of the most held stocks in the world. Wouldn't it be nice to know that Apple was going to crater a while back? Wouldn't that have been a cool thing to know? The indicator did. Let's check that out. Okay, so here we are on the Apple weekly stock. You can see here on the second week here off of the high, we got a sell signal. So Apple off of its high is down 32 points. That's quite a big drop for Apple, over 10%, almost 15%. And you could have saved quite a bit of money. Most people who are invested in the market have at least a little bit of Apple. You could have got in here or got out of Apple or protected Apple at about 243, and right now it's sitting at 228, a 6% drop from when the indicator told you to get out. So you could have saved quite a bit of your Apple equity by either protecting with hedges of shorting Apple or selling Apple or doing whatever you needed to do. But the indicator was all over the move down and would have helped you preserve your capital. And that's really, really important, guys. So this isn't just a, hey, I'm here to trade off my computer every day kind of thing. This is helping people preserve their capital because they can get out of Apple and wait for a re-entry that will get them back in. So that is what's really important. This indicator is crushing, guys. It's helping people make money. We have a very turbulent time in the market coming up. And I firmly believe that. I firmly believe people are not expecting what's really coming. And this indicator will help you save your capital, save your retirement, and save your future. I really want you to have it. And because of that, I give you a 30-day money-back guarantee. I stand behind all of my products. Test it out for 30 days. You don't even have to trade. Just get it and watch it for 30 days. And then if you don't like it, you didn't lose any money because I'll refund you for the indicator. And we both go our separate ways. But I think you're going to love it. I think you're going to think it's amazing and use it. And that's why I give you the 30-day money-back guarantee. So to get it, there's a link down in the description. Click that link. It's going to take you over to our webpage and right to our membership area for this. It's under membership plan, TradingView indicators right here, but it should take you right to this page. It's $59 a month. Again, 30-day money-back guarantee. And $5.90 for the year. You can get 2 months free if you want a yearly subscription. You also get the 30-day money-back guarantee on that. And if you scroll down, you can see what everybody else is saying that's been using it. Absolutely crushing the market with this thing. And again, on the bigger picture, it's saving your capital. It's giving you swing trades. It's telling you entries and exits. It's making life easier on you and helping traders out. So I really want you to have it. Check it out, guys. Now, let's jump into the chart and take a look. Okay, guys, so here we are on the 5-minute futures chart for the S&P 500. I did zoom in a little bit here so we can see the structure a little bit because I told you that was important and we do need to understand what we're looking at. And so off of this high here, they poked it up in the pre-market up to around 60.15. They poked through 60.10, and then they couldn't stay up there. And by the open, they were back down here at 6,000 again and never got really above that. And since then, they've pushed down off of that area into the 59.70 zone so far. We are looking for a little bit deeper of a pullback, and if it's going to be a B wave, we would expect it to be corrective. And as of right now, that is what we see. They had a potential here to have a 1-2, but then this got a lot of overlap. So if this is going to be a move down that's bigger, then starting with a leading diagonal, which usually results in a bigger bounce higher back toward the top of the move, and then continuation. That is possible, but usually less likely, so we don't count on diagonals. So as of right now, we would treat it as a corrective structure, looking for an A, B, C move down into that 5900 to 5880 area. It's a pretty wide zone. You have the top of the move from Tuesday all the way down to the lows here off of the 15th before they blew up CPI. So that area would be where we'd be looking for this market to come down to and hold if it's going to stay bullish. If they get down below this 5880 area, that opens the door to the blue box below and even lower, and we need to pay attention at that time. So we do have the start of a pullback here. Can the bulls or bears follow through, at least, and give us the ABC for the B wave? Or are the bulls going to be too strong and take this off of this support right here? You can see the black line that came down right into it here. Not quite all the way, but are they going to be able to hold this support and go higher? This is kind of our key level right now. So you had the regular trading hours spike down from the CPI day at 59, 56, 75 or so, right in that area. If they break this low, we should be starting down into this 59.20 area next, and 58.80 should hold if we're going to have a B wave. So that's what we're looking at right now. It does look corrective, so I would expect this to be a B wave, but this can change. If this is a leading diagonal, you get a bounce and then a move down. Over on the NASDAQ, now the NASDAQ is a little bit different than the ES and a slight fly in the ointment if you are bullish. The NASDAQ does have a much cleaner 1, 2, 3, 4, 5 down, and then a bounce, and then the start to the next move down. If they can continue this path, then we need to pay attention to the potential of a bigger move playing out that would break down below that 20,400 level we've been talking about for a while. However, A waves can be 5 waves, so this can still be an A, B, C, and we would look for them to get down into this 21,000 area to the bottom here at about 20,925 or so, the low here before they blew up CPI. They get below this low, then we are likely looking at lower lows incoming, and that would be down toward the 20,400 first and potentially lower than that. So we need to keep an eye on it if they do break down below this 20,900, see what kind of structure we're getting and what kind of overall pattern we're looking at. Right now, again, NASDAQ does have a little bit more of an impulsive structure. Well, a lot more because ES is overlapping. So it's something to keep an eye on. You have two different structures. Generally, when that's the case, the corrective structure wins and we see the support hold. However, that can be a leading diagonal. We do need to pay attention to that, and should they break down, that's how it would count. So key level on the NASDAQ for them to get through. They spiked it, We're unable to hold below it, but that 21,190 area here, the low from the open off of CPI, if they can get back through that, we would expect them to come down into this 21,000 area next. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our webpage. Once you're there, check out our membership plans area. We do have 2 incredible monthly plans that both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it and become part of our trading team before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material. We have our Elliott Wave for Beginners online course as well as our Advanced Elliott Wave course. These courses are helping real traders make real money and understand the market in a way that makes sense. In our advanced course, we're going over many of the concepts we've talked about so far. We are going over advanced fib levels, diagonals. There's also double and triple threes, flats, another concept we could see here soon, triangles, and then trading Elliott Wave. I say how important that is every video because it is. Our setups are important. You saw that we were long off the lows, and we understand the key level setups, and that's how we use it. And this teaches you how to do that. Now, as you can see on the screen, our traders are loving these courses, especially this one. Now, if you're just getting started, and this is a little too advanced, I understand that. We have our Elliott Wave for Beginners course. And that course is helping real traders make real money and understand this insane market. When you get good news in the market goes down and bad news in the market goes up, it's very confusing. And that's because the news cycles don't matter. Elliott knew this long ago. It's been proven in research that the news cycles do not move the market, yet people continue to be glued to them like they matter. Key levels matter. And when they break, you know what happens. And when they don't, you know what happens. And that's how you trade effectively. Now, in this course, you get 25 videos. And they start with your introduction to Elliott Wave because this is the beginner's course, the mindset and emotion, the KISS method, and why all of this works. The chart setup and tools, every tool you need with Elliott Wave Theory, why we use it and how, and the Elliott Wave for Beginners area, where we go through each of the waves. We go through the corrective depth theory, the pullback, the theory of alternation, everything you need to know to make sense of an irrational market. The cool thing about these courses is if you want to get them both at a discount, we do have our bundle pack where you get $37 off. But the better thing about it is if you just want to get them for free, check out our monthly rooms as the training material is included in this price. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video. It's about an hour long where I go through every stock you want to see, answer questions, give training, go over price action training. Everything you want to know is in that course or in that video. We do it every single day. It's worth the price of admission alone. You get the Elliott Wave for Beginners class. You get the Advanced Elliott Wave class. You get all of our trades. So we trade the SPY and the QQQ and we day and swing trade. So we do trade quite often. And if you're looking for individual stocks, futures trading, income trading, and advanced training, you need to check out PT's Throne Room because in there you get everything you get in the Invest with Jacob room, as well as the individual stocks, the futures trading, his income trading method that's crushing the market, as well as his reduced risk binary method that gets you in at a cheap price, get you big multiples on your money, and it's something you really have to see to understand, which is another reason you get that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. I'm here to help. I want to see you get in these rooms and let's make some money. All right, our key takeaways for today. Can the bears follow through? We're looking for follow through down into the 59.20 to 58.80 region for this B wave. If they break below 58.80, we need to perk up our ears and pay attention as the bears can start to run a little bit. If they can hold this area, we'd look for a C wave up towards 6,100 after that. Over on the NASDAQ, looking for the pullback to continue into this 21,000 down to 20,800 area. 900 area. If they can hold that area, we are looking for a C wave higher to continue the bullish move. If they break down below 20,900, that is a warning that we may be in a bigger pullback and moving down a little faster. Guys, it's the weekend. It's a long weekend. Happy Martin Luther King Day to everybody. Enjoy your weekend. Get out of the house. Have some fun. And I'll talk to you next week.